Good afternoon and welcome to the ClockOn webinar for the 2022 end of financial year process. My name is Matthew and I'll be your host for the session. Please be aware that this session is being recorded and that a copy of the recording will be uploaded to our YouTube channel shortly after the session has been completed. An email will also be sent to all registered participants to advise as to when this is ready. In this session, we'll be covering our end of financial year process as well as some commonly asked questions that our team is asked around this time of the year. We'll also have ClockOn team members noting down your queries in our sessions chat. So if you have any items that we haven't covered or you would like further information on, please let us know and we'll put aside some time near the end of the session to try to cover these points for you. All right, let's get started. Okay, so first things first, we need to do a little bit of house cleaning. So we'll just open up ClockOn. Already got it logged in there. First things first, we need to ensure that we have done our final payroll for the financial year. So easiest way to check that is just to go into your payroll and just observe the payroll period in there. So my payroll period in here is from the 1st of the 6th, 2022 to the 31st of the 6th, 2022. So the 30th of the 6th, 2022. If I was to, and I'm paying the employees on the 1st of every month after that payroll period. So in my instance, the payment date would fall into the new financial year. So I have already essentially done my final payroll of the year. So just as an example, if I go next on this, my next payment date would be the 1st of the 7th, 2022, which would fall into the new financial year. So in that sense, I don't have to do this particular pay run. I'll just cancel out of that. Looks like I've got a slight adjustment there, which I'll do later. So just bear with me for a sec, please. Just correct that, it's just so it looks a little bit neater. Okay, so we've got this payroll here. Again, I've already done the end of financial year payment, but the final payroll is processed as normal in the system. There's no real change to it. You submit your payroll, you submit your STP as per normal as part of this process. The one point that I'd like to sort of indicate at the end of the process of the STP for the last payroll in the financial year, you want to generally save or print your STP report, for your employee STP report. Don't worry if you haven't done it yet. I will be showing you later on in the session how you can retrieve that from the reports within the system. So we'll just cancel out of that at the moment. And the next thing we need to look at is we need to double check the location details that you've got in the system. So setup, location, and then we'll just double click on one of these locations. So the items that we need to double check include the ABN and the branch number, and we generally want to make sure that the company name is matched to the registered ABN name. Now, if you do have changes to these, if the ABN and the branch number are different, please contact ClockOn support just to verify, because if they're wrong, there may be other repercussions in the system from changing those. So please get in touch with us if you do need assistance with that. What else? We need to ensure that the contact name for who's responsible of the payroll or the owner of the business is set correctly. And also the street address details for the site. Apart from that, we also need the email address that is being used for the business in this section here. And that's it for the location details. Next is the employee details. So this is just a quick check on your employees front to ensure that you've got the details that you need for the STP submission. So we need the employee's name. I'll just click edit on that so we can see the fields a bit more clearly there. So we've got the employee's name, we've got the employee's address, So just confirm that that's set correctly. We've got the employee's date of birth. That should be set correctly, but it's always good to just double check it. We've got the employee's phone number and also the employee's start of employment, as well as the employee's tax category and tax file number. And once you've checked over those particular items, then you should be right. Now, just on another one, we'll just go, I believe Chris Duke is a good example for this. You can also adjust or view the year-to-date balances directly related to a particular employee by clicking on this year-to-date button. Most of these fields in here I would advise not playing with, because they're directly calculated from the actual payroll itself. If you make too many changes in this screen, you'll have problems with trying to reconcile it back to the reports. But there are certain items in here that if you need to have them set, they have to be set manually. The first being the reportable fringe benefit amount. So you'll need to manually enter that in there. There's no way to put that through payroll. Also, under the additional section here, you'll need to enter in any exempt foreign income or foreign tax paid amounts. On the allowances tab here, this will indicate any STP based allowances. In this example, we've got a garment allowance of $167.31 going to the laundry account, laundry STP type. Again, generally not advisable to change this on this screen. It's calculated through the payroll system. And any adjustments or amendments to those sort of things, you should be running through the payroll system so your reporting matches up to what you're trying to reconcile later on. Right, so once you've done those checks, you can, if you like, run your final STP submission. So if we go to payroll, STP wizard, employee update, ensure that you've got the right ABN selected and the right financial year selected. Next, you can click on the final payroll indicator option here. And what this will do is it'll tell the ATO that the employees are finalised. Now, if in the event that you do need to make an amendment later, you can rerun this process as many times as you want. So we'll just go next on this. Now it tells me that the final payroll indicator is turned on. This indicator indicates that it's the final submission for the financial year. Are you sure you want to continue? Yes. Now I've currently got mine set up so it'll just create files rather than actually submit to the ATO, so I'm safe to run this now, even though this is testing data. It'll come up with a list of the employees that are going to be included in the submission. You can untick or tick as you like. It'll show all the employees, even if all the employees in the system that have not been marked as not being included in STP, say contractors for example, even if they had a zero balance from your business within the financial year. They're added into ClockOn, they'll be included. So now if we go next, it'll come up to this screen to check the company records. So in here we've got the locations which were included under the ABN that I selected initially, the authorized contact name, which in my case I've just called administrator, and if there's an error message here. You shouldn't get an error message there if you've been submitting STP before now. The error message sort of indicates things like if the contact name isn't entered properly, or if there's a problem with the ABN, or something along those lines, or there's no email address provided for the company. Again, that should already be handled if you've submitted STP prior to this. And yeah, next we can just go submit, and that will send the details through to the tax office. So if I just go submit, again, I've set to this manual at the moment, so it's not actually going to send anything, but yep. And if you like, you can pull up your STP summary reports, or you can email them to the employees. It's up to you whether or not you want to email them. They can get this detail from their MyGov portals, and they'll need to generally go to their MyGov portals anyway to do their end of financial year process. themselves unless they've got an accountant who would probably handle that for them. So you do have the option there to email blast them, or you can just print them, or you can leave it there. So we'll just go finish on that process. Now, if you want to confirm that it's gone through properly, you can through the message center. So we'll just click on this little button up here. And then we can go down to STP jobs, and we'll just click on all. And this will give you the most recent jobs in the system here. And here is the update. Now, if you're actually submitting it through to the STP, you've probably noticed that you've got a bunch of green options in the status column, or hopefully they're green, to indicate that the ATO has received the submissions correctly. Again, I've submitted manually, so it's come up with none. But if you like, you can expand these drop downs to see which employees are under which items. I've got 2 here, by the way, because I've got 2 separate locations in the system. They're not 100% the same. They're the same ABN, but they're slightly different in detail. Okay, so that's how you submit your end of financial year. Now, you might want to take it one step further and actually reconcile your reporting. So to do that, what we need to look at is a couple of different reports in the system. So first being probably the STP employee reports. So to find those after the fact is, say, if you didn't remember to print them or save them, we can do that by going to payroll reports. And I usually use the drop down just to summarize the list a bit. PAYG, and then employee summary. Now, if we go into the reporting options in here, the date ranges that are used in here are slightly different from the other date range options with the reports in the system. The dates go off the dates that the STP was actually submitted on, rather than the payment date or anything like that. So if you're not sure what date the STP was actually submitted on, easiest way to find it is just to come to this STP audit summary report and run that, and it will give you a list. So I'm going to pull up the last payroll that was submitted. So that was submitted on the 1st of the 6th, 2022. And there we are. So this will give us the STP reporting. We could then save this or print that out. If you need to, again, you've got the options to whether or not to print it just through this little button up here. And you can send it to a printer, select the printer here and go OK. Or you've actually got the ability to save it to a PDF file if you like. So if we go print to file, PDF file, click on this little option here, pick a destination on the computer, give it a file name and click save, and that will save it as a file on your computer in which you can grab it later. I've already done these for these files, so I won't repeat that process, but we can close out now. So that'll give you the ability to recreate those or regenerate those STP employee reports. Now, for the reports you want to compare that to, we want to look at the payroll summary year-to-date report. So under payroll summaries, year-to-date, these two here. So this one will give you a breakdown of each individual payroll for each individual employee. It's kind of a little bit of an overkill for what we're trying to do here. So we might just stick with the payroll summary period detail year-to-date adjustments compact report. That will give us one line per employee. So let's just bring that up. We'll load in the current financial year. At the time of this recording, we were still in the 2021-2022 financial year. So if we click this button, it will pull up those particular dates. If you try to do this after that, you'll need to make sure that you pick the previous financial year to just give it the correct detail there. So we'll just bring it back to current financial year to date. Click the load button to generate the list of periods, and then click preview. And that will give us the payroll summary report with the employee's hours, gross wage, gross adjustments, any year-to-date adjustment allowances that have been processed through the system to correct any figures, as well as the total gross adjusted by that year-to-date amount. So we'll talk about year-to-date adjustments a little bit later in the session and go from there. It'll also give you your super balances. This is inclusive of things like salary sacrifice and co-contributions as well. I'll also show you a different report which will help you break that amount up as well. Again, I've already saved this report, so we'll close out of this for the moment. Now, another useful report is the allowances and deductions report, which is also on this screen here. So again, we've got several different versions of this. This particular one will give you a broken down by employee by when the allowances were actually generated. So you can see how much and you can see the totals. Again, a little bit of overkill for what we're trying to do here. We've also got an adjustment rolled up version of that. So again, it will just give you employee, what the allowance was and the totals, whether or not it was pre-taxed, taxed or post-taxed, or whether or not it was super related. So this report is the one that would be generally running. So just to give a bit of an example on this one, so let's just pick, again, financial year to date, load. We can also select and deselect allowances down here. So if there's a specific type of allowance that you want to get the figures for, you can individually turn them on and off up in here. What we might do in this instance is just turn off the default pay disbursement because we don't want that sort of muddying the waters and making the report longer unnecessarily. So let's preview that. And that gives us a report to say Claire Bailey had a uniform allowance, it was before tax, and it was that amount there. Thomas Blackwell had a couple of allowances, and we've got the figures there. Another report, which is not really necessary for end of financial year, but I find useful for trying to figure out if you want to try to reconcile your overtime amounts, is under the department payroll reports department costs heading, and is called gross hours day summary averages. So if we generate this report, again year to date, financial year to date, load that and preview that. This report will give us, it's designed to give you the average working week, which is very useful for when you're trying to calculate long service leave amounts and things like that. But in this instance, it will also give you the overtime amounts, the total hours, and the total costings, which will allow you to add those up per employee and allow you to reconcile those figures. Again, not 100% necessary for end of financial year, but another useful report just to know about. You can also, if you like, tick on the option for favorite reports. If you have regular reports that you use all the time, if you tick that option on and click the save button, it will be added into your favorites list here. Just allows you to quickly find those and bring those particular reports up if they're ones that you want to use quite often. Okay, now that we've had a look at those reports, let's look at some practical examples on how we can actually use those reports. So what we'll do is we'll just close out of that for a sec. Now, I'll just bring up some reports that I've saved prior to this. And we'll just go back to this employee, Helena. And let's have a look at trying to balance this STP employee summary report back to the payroll summary and see what's going on here. So just looking at this one, we've got a gross amount on the employee's STP report here of $24,424.96. If we have a look over on the total gross on the payroll summary year-to-date report, it's higher. Now the reason for that is on the STP report, the amounts are actually split out across the report. So because this employee has an overtime amount of $269.78, that amount needs to be added to that amount to equal the total gross on this report. So just be aware that when you're looking at the STP employee summary reports, that it is split out. Right, so we'll move to the next one, which is Thomas Blackwell. Now his one is a little bit more complicated. So in his instance, he's got a gross wage on his STP employee report of $23,401.69. Yet on his payroll summary, his amount is actually less. So it's gone the other way around. And the reason for that is, again, because of the reporting. So the gross wage is calculated with an amount that is before any allowances are added to it or any overtime. In this case, there's no overtime. So we've got the 24,401.69. We add the allowance, the STP allowances down here to that amount. So we'll add the 1,223.47, which would increase this amount further. But what we've got to do then is we've got to take away the super salary sacrifice amount, and that will bring it back down to the total gross of 19,225.16. Next, we've got Claire Bailey, who has a couple of things going on this one. So if we have a look at hers, we'll notice that there's a difference in the ordinary time earnings, so the amount that the super is calculated on, and the gross wage that the employee is receiving. Now, there can be a couple of reasons for this. In this instance, we'll have to do a little bit of investigation. So let's just go back to ClockOn, and let's just have a look at this employee's setup. So there's Claire Bailey, and we'll just go to pay, and then we'll just have a quick look at the year-to-date screen and see if there's anything funny in here. So if we have a look in here, we can see the gross wage for the employee. I'll just bring that STP report back up. So it looks like the ordinary time earnings is equal to the gross wage before adjustments are made. So with the adjustments there, it actually looks like it's the total gross. So the difference is something to do with an adjustment. So let's just quickly have a look at the employee's allowance setup. So we notice that the employee's got a uniform allowance in here. One thing is that as a uniform allowance, it probably should be set to a PAYG location allowances, which we'll fix that up later. The other thing is that coming into here, we notice that the employee's allowance is not being included in the super earnings base, hence why it's lower on the OTE. Now that may be correct, it may not be correct. We'll show you in a bit on how you can actually correct that and pay the amount to the employee if necessary. So the other thing we notice from the STP reporting is that the employer superannuation seems to be a bit low. So we can investigate that further as well. So let's have a look here. So if we have a look at the rule set the employee is attached to, which in this case is pharmacy assistant part-time, we want to bring that up. Pharmacy assistant part-time. And let's have a look at the super settings. Yep, so there's the problem there. The SGC agreed percent is currently set to 9%. So the amount that the employee is getting or has gotten is currently only 9% of the ordinary time earnings. So there's a discrepancy there. So what we'd want to do for this particular financial year, for the 2021-2022 financial year, we want to ensure that the employee got the minimum of 10%. So we'll need to do a bit of a back payment to increase that superannuation amount. Also, another thing that's come in recently for the change, as the next financial year, the 2022-2023 financial year, has a couple of changes to super, in that the calculation method, or rather the SGC agreed percent is moving from 10% to 10.5%, and the super threshold amount is changing from $450 per month to 0. So there'll no longer be a period where the employee doesn't get super for the first 450, if they earn less than $450 in a month. We've got this option in here for calculation method to automatic, and what that will do is it'll use the payment date for the employee at the beginning of payroll to determine which financial year that you're running it for. And if it's set to automatic, depending on the year that you're doing it for, will depend on the SGC percentage. Now, if you have an agreement with the employee to pay a higher than normal SGC amount, you can flick this over to manual and put whatever you want in there. So say if you had an agreement with them to pay them 12%, SGC would go through as 10%, and there'll be an additional 2% for your payments to that in particular, the employees under this particular rule set. We'll just flick that back over to automatic though, and save that. Right, so now we need to correct those figures. So we'll just close back out to here. Now we need to do an additional payroll to correct those figures in the system. So let's just go payroll, and then payroll. And we want to make sure this payroll falls within the correct year. Now, the best way that I've found to do this is just to do a single day payroll. So what we'll do is we'll just select this pay period. Now we don't want to do it for everyone. We just want to correct Claire Bailey in this instance. So let's just pick her. So I've unticked include all employees and just selected her profile. And now I can go edit period. And this gives us the option to select the dates for the period. So what I'll do in this particular instance, I'm just going to set it to the 31st of the 5th to the 31st of the 5th. Now the reason why I'm picking those dates is it's a single day, and because it's a single day, the following day will be considered the first day of the next payroll. So when I process this, the employee will kick into their normal pay cycle and they'll just flow in with everything else. So yep. The other thing we want to do is we want to also check this no entitlements payroll option here. And what that will do is it'll prevent the employee from accruing any additional leave for this particular period. We'll just go save on that. Are you sure you want to change it? Yes. And that'll give us that additional period there. So now we can just select it and go next. We can set the payment date. Again, the payment date needs to be within the financial year you're running it for. So in this instance, I might set it to the payment date to be the 30th of June, just so if I'm looking for it in the reporting, I can quickly find that any adjustments that I've done for the financial year are on the 30th of June when I'm trying to find it again within the reporting system. This will bring up the payroll screen as you would normally see it. So I might just expand that out to medium. Now there's hours on the payroll. These are probably pre-generated for the employee. I'm just going to go into the timesheets, select all, and just delete those from the system. So I'm not paying the employee anything in regards to timesheets or anything like that. I'm doing adjustments. So with adjusting the employee's super, what we want to do is we want to enter it in down here under the super earnings base option. Now, because there's no payments and there's no amounts in this payroll period, the super line seems to have disappeared. Easiest way to get that back is just to add an allowance option in the system, and that option will come up. So if we go allowances and add just a blank one, let's just call it something generic. Let's use back pay in this instance. We'll set it to payroll period. We'll leave it as a $0 before tax amount. So it's not actually going to pay the employee anything, but actually we might turn on include in super earnings base just in case it's used in the future. And save that. And by simply having that there, it creates the split for the super earnings amount there. So from there, we can add the amount in, the difference from the 9% to the 10%, which in this employee's case was $275.08. And there we go. So that's added that super contribution to the employee. If I process this, it will increase the employee's super by that amount. Now, the other thing that we did notice while we were in there was that the allowance amount that was in there previously, the uniform allowance, was being paid as a gross wages and salary amount. So it wasn't going through to the correct STP type. So what we need to do to adjust that is we need to create a couple of year-to-date allowances. And what they do is they allow you to make corrections to your payroll outside of your payroll run. Normally when you do an allowance, say in a deduction for example, it has to have a dollar figure related to within the payroll. So you can't do things like do a salary sacrifice of $10,000 when you're only paying $200 in a payroll. The max you could do is the $200, for example, just as an example. Year to dates are a way to get around that to adjust the figures in the back end. So what we need to do here is we need to adjust this one just so for future payrolls it will work properly. So if we go change the PAYG location to allowance, change the STP type to the correct instance. For this one, I'm going to assume it should be laundry. Now for the year to date, so that'll correct it going forward. So any future instances of that should process correctly. Now what we want to do is we want to add an allowance in here and we want to make this a deduction. So YTD, we'll give it a name, year to date uniform deduction. So what we want to do is we want to change the process as type and come down to these options down here. So we've got the year to date before tax deduction. So we need to deduct it out of the gross wages and salary and put it into the STP allowance type. So in this case, we'll year to date uniform deduction, process as a year to date before tax deduction, leave the PAYG location as gross wages and salary. We'll leave the amount as $0 and we'll do the amount directly on the payroll itself. Now we'll need an additional allowance to put the amount onto the STP allowance type. So let's just go add here. Again, year to date uniform correction, something meaningful that you can understand if you were to look at the reports and try to ascertain what's happened in the past. So let's go year to date before tax allowance in here and set the PAYG location accordingly to what we want to allocate it to. So in this case, PAYG location allowance and set it to laundry. And again, we're going to leave the amount as 0 and we're going to set the pay type as per period. Oh, that's reset, so we just need to fix that up. And then save that. Now that's given us 2 new allowances on the payroll screen here for the correction and the deduction. So now we need to work out what that allowance amount is. So we've already looked that up on the report, but we'll just pull that up again just to reiterate that. So if we go to the reports and go to the payroll summaries, not that one, that's not the rolled up one, we want the rolled up version. Current financial year load, and we've also got the ability to limit it down to just that employee, just so we don't see more than we need to. So we'll just select just that employee, and if we wanted to, we can also limit it down here. I'm just going to leave them all on, but we could just go only want to see the uniform allowance and run that. We'll just go preview. So the uniform allowance here again is $329.40. Let's close out of that and come back to the payroll. So 329.4 and 329.4. So those are year-to-date allowances. They're not going to affect the employee's net figures or anything like that. They're just going to adjust the employee's year-to-dates, but through a payroll just behind the scenes. So in here we've got the year-to-date corrections and we've got the changes to the employee's super here ready to go. So now if we process that, I'm just going to untick this notify employees option. What that is used for, that's used for ClockOn Go users, whereas when you run a payroll for the employees, it will send them an app message to indicate that there's a payroll that's been done and there's a pay slip to be viewed. So in this instance, not necessary, so I'm just going to turn it off. We can see the summary of the payroll, so nothing's going to be paid. We're only going to put another $275.08 into super. And finish that. And now when we go to the employees, where is it? Employee details, there we go. We'll go to Claire Bailey's year-to-date report. We will see that the allowance in here, we've got the uniform correction in there now. I think that one was actually from a previous instance of that, so I'll just remove that one out. So we've got the uniform correction there of $329.40 there, and we should be good to go. Okay, and then you just recheck your reporting from there. Okay, so just some general notes in regards to the new financial year. We've already gone through the how to change the super percentage options, and also the fact that the 450 threshold is being removed. We might just run through a quick scenario here in regards to if the employee's minimum rates need to change. So to find that, what we need to do is we need to just open up a web page here, and usually what I would do in here would just be to type, we need to look up the award details. So award viewer, and then if you've got it, the code for the award or the name for the award. That's the easiest way I usually find the awards. And that the first result, awardview.fwo.gov.au, will take you to the awards themselves. Now, if you need to update the rates for the employees, for the minimum rates, what I usually do is just Control F on these reports. Now, depending on your browser, it might show up down the bottom here, it might show up the top here. In my particular one, it's down the bottom. And then just type in minimum. And then we can click on that and it'll take us straight to it. So in here, we've got the minimum rates per level classification in here. And if we scroll down a little bit further, depending on, in this particular award, depending on the age, the employee gets a particular percentage based on their age as to what level they're actually on. So if we have a look at the rates scheduled in ClockOn, and say pharmacy assistant level 1. Now I've already upgraded this one, so or matched it to this current financial year, so it's probably already set here. But if we compare that back to here, we can go through and just see how that was actually calculated and how we got these dollar values in here. So if we have a look here, we've got the minimum hourly rate for a level 1 is $22.33. I've added in each of the different levels in here, and we've got beyond 21 years at 22.33 here. If we scroll down here, we've got the rates in here. So if they're under 16 years of age, they only get 45% of that. So 45% of 22.33 comes out at the $10.0450, and likewise the 50, and then the between the 17 and 18, and you generally add those amounts in there. Now, once you've put those in there, if you've got employees attached to that particular rate set, and the attachment is done through the employee details screen on the pay tab, just here, rate set, I believe I've got Thomas Blackwell is on that one, just as an example. Set against that particular rate set. Now, if that amount was to be different, so let's just change him down to, let's just change it back to, let's pretend for an instance he was on $10 an hour before this change was made. Now, if we were to run a payroll with Thomas Blackwell, after the rate was updated, we would see this screen here. So it would tell us the current rate of pay that the employee is getting and the new rate that it wants to assign him to. We can then simply highlight it and go update, and then next, and it will apply that new rate within the payroll. And once the payroll has been processed, it will update his pay rate to the new rate going forward on his profile. Another thing you might want to check if there have been award changes is the current overtime and penalty rates. Again, you can use the search bar in the web browser, or you can just find it on this left-hand side here. And just have a look at the percentages and check the details in here. You can compare that back to what you've got in ClockOn. Under rule sets, select the particular rule set in question, and then you check the overtime rates and the penalties and loadings, just to confirm that they're all fine and all correct. Okay, common end of financial year questions are, some of them are, how do I set up a bonus allowance for an employee? So really easy to do. All we need to do is go into the employee's details, pay tab, edit. Obviously you'd select the correct employee that you want to apply it for. And I possibly picked someone with too many allowances, so I might just change that over. Let's pick someone else. Let's see if this person has less. Nope, more. A lot more by the look of it. Okay, last one. If this one has a lot on it, we'll just use it. Yeah, we'll just use this one. Okay, so what we want to do is we want to just click add, and setting up a bonus payment is really easy. It's basically just name it whatever you like. So bonus payment or bonus. Before tax allowance, change the allowance type, set the STP type to bonuses and commissions, and then if need be, set it as include in super earnings base. And then either enter the amount in here and set it in here. You can also, if you choose to, pay in next pay only, and what that'll do is it'll turn that allowance off in the next payroll after it's been done. Or you can just leave it at 0 and just say per pay period or something along those lines, and then in your next pay run you just add an amount to it in exactly the same way we did for the year-to-date allowances. Another common question we get, and I might actually load up the payroll for this particular one, is how do I set up director's fees, and as another part of that, how do I then in turn salary sacrifice those director's fees. So let's just bring up this particular employee here. We might just bring that to medium, and we'll just go allowances on this particular one, and we'll just have a bit of a setup on this. Just remove everything from this one, and we'll go add, and we'll just first of all just set up director's fees. So this is really easy. Director's fees, allowance, STP type, director's fees. So it's very, very close to what you do for a bonus payment. You just pick a different STP type. Again, we can pick payroll period here. Again, that reset. And then we can, again, if it's needed to, include it in super earnings base. In this particular example, I'm just going to tick in include in super earnings base. Just not sure if director's fees have to be, but just for this example, I'm going to include it. The second thing I need to do is I need to set up a salary sacrifice allowance in here too. So let's just go add. Salary sacrifice. And then we can change the type in here to super salary sacrifice. We can set the per to payroll period. Yep, scrolled. And we can also set the fund if we want in here. And we can set a member number if we like as well. So if we save that, now we've got two allowances in here. One is the director's fees and another one is the salary sacrifice. So if we say put in, let's just say for example, this employee is going to get $2,000 of director's fees. Now, because we ticked on the include in super earnings base, there is now $200, 10% of the employee's amount in as a employer contribution. And if we put that entire amount as a salary sacrifice, it reduces the employee's net to zero, allocates the $2,000 there, but because you cannot, as a ruling by the ATO, you're not allowed to reduce your super earnings base by salary sacrificing. I think that came in from 2020, I believe. So we can't reduce the super earnings base below what we're actually paying the employee by salary sacrificing. So what we're doing here is we're redirecting the $2,000 from the director's fees to salary sacrificing, and we're also paying them, as they rightly should have, the $200 for the super earnings base. And that's it. If we process that through, it will do the director's fees to super salary sacrifice. Alright, so let's have a look and see if there's any questions that have come up in the session and see what we can do to answer them. So just bear with me for a sec. Right, so we've got Trish has asked, does the STP include terminated staff for the financial year? It definitely does. It'll include anyone that's been processed within the financial year that has either had an amount or hasn't had an amount, but they've been employed by the company within that particular year. So you might get staff that have $0 amounts come up on their PAYG summaries or on their MyGov portals for your business, but that's fine. That's all good. So long as you finalize everyone, and everyone will appear in that list. Okay, so we've got one from Bert. Just give me a sec. I've just got to read it a little bit. So. Right, so it's in regards to super. What we were going over, he's indicated that you need to adjust your super within 28 days of it being, and it's scrutinised. That is correct. However, we were just going through on how you can adjust it for your end of financial year process to ensure that it was actually correct. All right, so has anyone else got any questions or queries that they'd like to pass through? All right, so we've got nothing else so far, so we might finish up the session. So, all right, well, thank you for your time. I hope it's been useful. And as I said at the beginning of this session, the session will be uploaded to our YouTube channel, so you can review and use it and get the information again as needed. All right, thank you for your time.